All right, now let's head to the global space now. And of course, top on the news is the Federal Reserve. Yep. Laddie, you didn't even wait for me to call you in. You and Jerome Powell are friends, but President Trump is very angry with both of you.
He's not having it. You know, President Trump is not having it. He wants his cut, you know, at this point. He believes it's time, you know, for the U.S. to have its first cut and even multiple cuts, you know, going into 2025. But, you know, from what was said so far yesterday, maybe just about 2 cuts left, max, you know, in 2025. So they have it. The Federal Reserve held their key interest rate at 4.25 at about 4.50% for the 4th straight meeting yesterday, projecting a slowdown in growth and a spike in inflation amid tariff-driven uncertainty, you know, signaling a flirtation with a stagflation scenario. Despite this caution, policymakers still anticipate 2 rate cuts by year-end, forecasting a median policy rate of 3.9% in 2025. However, next year's outlook is darkened with projections now pointing to a slower pace of cuts, about 3.6% in 2026, up from 3.4% and 3.4% in 2027. Let's have a listen to the Fed chairman there, Jerome Powell. Take a listen.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer-run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns.
That was Fed Chair there, Jerome Powell. Given the latest decision, another uphold at this point, and we did get reaction. President Trump, again, assailed the Fed Chair there, branding him the worst, and, you know, some harsh words there coming from the president towards the Fed Chair just hours after the Reserve opted to hold interest rates steady for the 4th consecutive meeting and declined to commit to future easing. So Trump's harsh post shared on Truth Social was linked to an article highlighting Freddie Mac and Fannie Mae regulator bill as a political suggestion that Powell should resign if he doesn't cut rates. So that was a reaction right there. But let's get a check on how other markets and other economies reacted. Juliana joins us now. Great to have you, Juliana. Good morning. So what's the reaction to the latest decision by the U.S. Fed in the UK, or do investors there, maybe they don't really care?
Good morning, Laddie. It's quite interesting, actually, listening to Powell. Thank you for playing his clip, because, to be fair, I don't think this is making as big a statement as it would have a couple of days ago. Why? And that's because we're, I think, in the 6th day of the Iran-Israel conflict, and I think all markets are very much focused on what US President Donald Trump is going to do, because, as we know, this is going to have huge global ramifications on the world order, including policy and including trade. So I think that was why Jerome Powell, the US Fed chair, was so easily able to laugh off Trump's remarks calling him stupid, which, again, in any normal world would be absolutely unacceptable. But we're living in Trump's world, right? And he can criticize his central bank governor like that. But look, there are many uncertainties at the moment. And I think one thing that is certain, particularly from a US stance, is that Jerome Powell is not a man to be moved. He downgraded American growth this year. I think he kind of uplifted inflation. He thinks inflation is still going to be elevated. And he spoke about the key topic of the US economy at the moment, which is tariffs. I think it's very easy for the Trump administration to play up just how brutal these tariffs are going to be on some of their counterparts across the world. But how is this going to affect the US consumer, right? And I think that was what was so important and key about what Powell said yesterday. I think broadly it's good. The jobs are up. I think they added a couple of 100,000 jobs last month, according to the data that came out. Household consumer confidence is dipping slightly, but that's because there is just so many geopolitical uncertainties at the moment. But as you said, fourth consecutive meeting in the row, rates held steady between 4.25 and 4.5%.
I guess we can call him thick-skinned Jerome Powell, at this time. But we'll see if he doesn't bend to pressure, going forward there with Trump wanting a cut, at this point. But we did get data out of the UK. Inflation, that eased about 3.4% last month. Is that good enough news for the Bank of England?
I don't think it's enough. No, I think, it fell, as you quite rightly said, CPI from 3.5% in April. We've got the Monetary Policy Committee gathering at Threadneedle tomorrow, and I think we're going to see something similar to what we saw out of the US. I don't think Andrew Bailey, the central bank governor here, is going to shift again. I think, outside of Nigeria, this Israel-Iran war is, topic, like front and center. And I think now, there's a shift in seeing exactly what happens next. Is there going to be a regime change? So at the moment, all domestic issues seem to be sidelined and everyone's focus is on the Middle East.
Right, so they're expected to get a decision from the Bank of England today. I guess the consensus, a hold at this point.
Yeah, that's right, a hold at 4.25%.
All right, definitely, we'll keep tracking that. Thank you so much, Juliana, for giving us the details there, what's happening in the UK.